excited for today. Hi, everybody. Welcome to today's presentation. We're so excited to be with you today. My name is Meredith Medlin, and I am the Director of Partnerships and Impact for Axion Opportunity Fund. As we give people a little bit more time to log in and join us, I just want to quickly go over a few Zoom logistics. I know everybody's much more familiar with this than we were a year ago, but just to make sure, you should be able to see our presentation today through the Zoom window if you've joined us by computer. And in that window, you'll be able to find a black toolbar. And in that toolbar includes the chat button. We've already been typing into the chat. I really encourage you to use that chat box to share your questions throughout today's presentation. Feel free to type them in as they come to you so you don't forget. We are going to allow ample time for questions throughout the presentation today, so I'll facilitate that Q&A based on the questions in the chat box. So we encourage you to say hi, ask your questions, and really participate in that feature. Next, just a quick note that we are recording today's webinar so you can review this information at a later time. So for those maybe joining by phone call instead of by computer, you'll be able to see the slides in that recording as well. So I'll send a link to the recording via email within the next 24 hours. Lastly, before we get started with all of our fantastic information today from our speaker, I want to quickly let you know that after the webinar, concludes, you'll be prompted to do a survey. So please do take just a couple of minutes to share your feedback on this presentation. We really value your opinion, and it helps us continue to improve our webinars going forward. All right, all the logistics out of the way, we will do a quick round of introductions. First, I'll share just a little bit about the organization I work for, Axion Opportunity Fund. At AOF, we work closely with small business owners like you all to make sure that you have access to fairly priced loans, as well as educational resources and coaching and networking support, really all the resources you need to make sure your business is successful. Our clients tend to have been locked out of traditional financial systems or have limited access to resources, but we make sure to provide you all with fast, personalized service so you can grow towards sustainability. We know in particular that the past year has been very difficult for small businesses and small craft food and beverage businesses in particular. And so with everything that's happened since this pandemic began, it makes complete sense to me that many of you who've joined us today are so interested in strengthening your accounting and your bookkeeping to really keep your business on track. And my team at AOF is so grateful to have strong partnerships with organizations that share our mission to support your businesses as we all kind of navigate these challenges. As many of you probably know, since 2008, Axion and Samuel Adams have partnered on the Brewing the American Dream program. This program has a singular focus of supporting food and beverage businesses with access to capital, coaching, networks, promotional opportunities, really all the tools you need for your food business to thrive. This is a national philanthropic effort that has provided more than $64 million in loan capital, as well as that best-in-class business coaching, completely free of charge, to more than 12,000 businesses across the country. As I'm sure you can tell by all of those statistics, this webinar is just one more example of Sam Adams' unwavering commitment to small food and beverage businesses. We are so excited to continue this partnership. We're so grateful to have a steadfast partner like Sam Adams. And in addition to that partnership, AOF is so thrilled to enjoy a strong partnership with VP Consulting, a Bay Area firm that supports small business owners as they create their business plans, put together financial projections, and so much more. VP Consulting's founder, Viridiana Ponce, is with us today, and I'm so excited to introduce you, Viri, and thank you so much for being with us.
Thank you so much, Meredith, for this invitation. And hi, everybody. My name is Viridiana Ponce, and I'm really happy to be here because I'm going to be talking about two topics that I love, food and numbers. So these are some pictures of some of my amazing clients in the Bay Area. So most of the pictures, or actually all of the pictures you will see of the food, are all of my clients. So I like this one, Jacqueline su sabor cubano. So I understand that it could be scary to understand and to manage our finances, and that it could be overwhelming, but I know that you could learn just the same way that you've learned so many new skills, so many new platforms and processes and different steps in you starting your business, you can also learn how to manage your finances. So today, I will help you with understanding some of the key numbers and benchmarks in the food industry. We are also going to be talking about financial projections and why every food business and every business should be using this tool. We're going to learn how to calculate our initial budget, and we're going to learn practical ways to manage our finances so that we can make better financial decisions. So a little bit more about myself. So I'm a small business consultant and coach, and I've been so fortunate to have worked with over 1,000 entrepreneurs. And so what I do is that I help small businesses formalize and launch and grow their businesses. My areas of expertise are financial projections, getting my clients ready to take on either loans, investments, or loans. And I love teaching. So over these last couple of years, I've been able to create and lead over like 60 courses and workshops. So I love being able to share resources and being able to help entrepreneurs get the knowledge that they need in a really simple way. My background is in business and in auditing. So I was an auditor for a couple of years and a financial analyst for a couple of years. And so I really love numbers and spreadsheets and projections, but I also love food. So not only eating amazing food, but also learning about different areas in the food industry. So I do have a level 1 wine certification and my Serve Safe manager certification so that I'm able to really talk the same language that my food clients are talking. I'd love to know in the chat a little bit more about you as well. So I know some of you already started introducing yourselves, but if you can let me know in the chat, what type of food business do you own or do you want to start up, and also where you're joining us from. So I know that there's a farm, there's potato pies, hot dogs. Where is everybody else? I'd love to learn. Put it in the chat. Meal prep, delivery, and if anybody has social media, feel free to drop in your social media, and then I will save this chat so I could start following you after this webinar. Bait Market Garden in Indiana, Boston, and I'm in the Bay Area in California, just FYI. Kombucha business and aspiring farm, welcome. Ina's Kitchen. I love this. Thank you so much. This could also be a really good opportunity for us to network and get to know other food businesses. So we're going to jump into talking about some key numbers, costs, and benchmarks that we all need to keep in mind for the food business. Thank you, and keep the introductions coming, everybody. So I know that in order for us to be in this business, we have to be passionate and we have to have dedication. But if our numbers are not adding up, that's not really going to mean much. So we really need to make sure that we're paying attention to our numbers so that we're able to stay fully operational and to be able to grow. So I want to ask you in the chat, so this is going to be interactive, all right? So I'd love to get your guesses. What do we think is the average profit margin for food businesses? So what do you think is the average profit margin for food businesses? So 12%, 6 to 10, 5, 35. All right, what about the rest of you? I know that there's 6%, 15%, 25. All right. So actually, before COVID, and these are 2019 numbers, the average profit margin for a single location restaurant was 5%. So I think a couple of you, Giselle, yeah, a couple of you guessed it. However, after COVID, obviously our industry was really deeply impacted. There was a lot of different changes, a lot of different closures. And so those numbers actually for the profit margin actually decreased for 2021 and for 2020. And so it went from being 5% to 4%. So it's really important that we are paying attention to all of our numbers. So what we're going to do this little exercise. I want to go through what are the major costs for the food businesses, and then how could we use those major costs to help us out. So over here on the right hand side, we've got this little graph that has what are all of the costs in a summarized way. And if you could see, these numbers represent a percentage of our sales. So if you see this graph over here, we see that about 35% of our sales go into paying our wages. So that's basically all of our payroll, right? And so it's so important that we are creating a labor schedule or creating a good, efficient schedule, that we are avoiding overtime, that we have a way to actually track the time that we're spending, and that we are creating flow charts for our business so that when we do bring people on, they understand what they have to do so that they could be efficient, because 35% of our sales go into paying wages. The other big cost component in our food businesses, no surprise, would be our purchases. So our cost of goods sold, any supplies that go into, or any packaging that goes into giving the product over to our clients. And so that represents 32.3% of our sales. So if we think about it, not if we think about it, if we do the math, just with these two components, so labor, right? So how much we're paying out in payroll, and our cost of goods sold and our packaging, 67% of our sales are being allocated to cover those costs. So it's really important that we pay attention to these numbers. And for example, for cost of goods sold, it is important that we are actually writing down our recipes, that we actually know how much our cost per plate or per product that we make, how much is that costing us? And we have to know it for every single item that we are providing, that we're serving to our clients. Really important that we are also tracking our inventory, right? And that we're just not going to the store and saying, all right, I think I need this, I think I need the other, this other thing, but really going in there with an inventory list, going in there with a budget, and actually setting a budget, because just alone with those two categories, already 67% of our sales are going over to cover those costs. The other big component in our cost structure, to no surprise, would be rent. So rent and utilities is about 10.6% or 11%. I know in the Bay Area where I live, those numbers are a little higher. So we start seeing a lot of like 12% or 14%. So we really want to make sure that we're not just getting into a brick and mortar because we want to get into a brick and mortar, but that it actually makes sense, that we actually have the sales to be able to cover our rent, right? And that we're not getting into a lease that we're just going to work to be able to cover those costs. So if we add up our wages, our purchases, and our rent, that equals to 77% of our sales, which means if you made $100, $77 are going over to pay those three areas. So, and then so that leaves us with what? With 33% less than that, to be able to cover all of the other expenses. And we sure do know that there are so many other expenses like marketing, there's insurance, there's, if you are hiring, for example, if you're hiring a consultant, if you need legal or any accounting support, those are all costs that will be coming out of that remaining budget. So we want to make sure that we understand what the major costs are, that we know what those major costs are so we can make informed decisions for our business. The numbers for 2021 look a little bit different. So if you see this graph, this actually shows that wages at about at the same mark, so 35%, but we start seeing that the purchases are actually more expensive in 2020 and in 2021, or that they represent a bigger percentage of our sales. And it's also because we've seen that the sales actually decreased in 2020 and 2021. But overall, we need to make sure that a couple of key numbers for us to keep in mind would be that we want to aim for the following numbers. So using statistics and using these national benchmarks. And let me just tell you, I got these from the sources IBIS World. And so if anybody has access to a local library, you can go in and use this database and pull really amazing information for specific industries or for specific types of food businesses. This one is for a single location restaurant, but you could pull information in there specifically for catering. You could pull it for different types of products, for coffee shops. And so I would invite you, if you're not signed up for your local library, sign up to your local library, because a lot of times you can actually access all these wonderful market research reports. And so the way that they came up with these numbers was using national numbers for single location restaurants. So I want us to keep in mind a couple of key numbers. So when we are thinking about our cost of goods sold and what we should be aiming for, what we want to, and this is what I usually keep in mind with my clients, is that we want our cost of goods sold to represent about 25 to 30% of our sales, right? So we have to take the time to figure out how much is it going to cost me to make X plate or X food product. And as I mentioned, we want to make sure also that we have an inventory control. Labor, we should aim for about 30 to 35%, because, and those together, a lot of times you'll hear them referred to as our prime cost. So we want to make sure that we're aiming for this prime cost not to be 65% or more of our sales. Because what happens if, for example, our cost of goods sold actually represent 40% of our sales? What's that going to do to our bottom line? It's going to slash that bottom line, because on average, our profit margin is less than 5%. So it really is important for us to take note of all of our costs, right? And to know how much each plate is going to cost. How much is it going to cost every time you're going to go to the restaurant supply store, right? It is going to be really important how you're staffing, how you're using your time, that you're training your employees, because those two components make up the majority of our costs, and the majority of our sales are going to be going over to pay for those. So we want, and also when I'm working on financial projections with my clients, our profit goal is that they make from 8 to 10%. So especially if it's going to be the first time, or it's the first time that you are going to be a food operator, you don't want to say that your profit goal is going to be 30 or 40%, because we know that on a national average level, it's less than 5%. So we also want to work on, have achievable and realistic expectations of our profit margin. Does anybody have any question about these numbers?
Yeah, thanks, Viri. So we had a couple questions come in. The first is from Alex. Are wages for the owner included in that 30 to 35% labor category?
Thank you so much, Alex. And yes, you want to include yourself in this payroll calculation as well. And then especially when you are working on your financial projections, you want to try and put that in there, because you want to create and build a business that's going to be sustainable and that's going to be able to provide you with money. So yes, it's included in there.
Great, thank you. And then I actually had a question for you too. Folks, feel free to type any additional questions about these numbers in, but I am wondering about the sort of incremental process of getting from that 4 to 5%, as you mentioned, that most food businesses are at now, how we get to the 8 to 10%. And, there are probably small steps in that process that really end up making a big difference.
That's an awesome question. Thank you so much, Meredith. So a couple of things that we can do, and I absolutely have clients that have a higher profit margin, and also know of restaurants. And I think that it has to do with efficiency, right? It has to do with making sure that you're tracking your numbers, making sure that you, for example, that you have a great understanding of what you're offering in that menu. And a lot of times what I've seen is having that inventory control, having those, a good control over what you're purchasing. I think a lot of times as people are formalizing their business and they're able to, for example, get their seller's permit, they're able to buy at wholesale distributors. And so they're able to get a better pricing on their cost of goods sold. I think at the beginning, as we're still learning about what we're offering or about our ingredients, a lot of times I've seen that people will not buy wholesale, or they'll buy something that's more expensive, and then they change up their menu a lot, and so there's not that consistency. And so I do see for the first year that the cost of goods sold month per month is all over the place until they start really like nailing down their menu, they start buying wholesale, and they start actually writing out and tracking their cost of goods sold. And there's also certain industries, like a lot of bakeries, that their cost of goods sold are actually going to be lower than for a full service restaurant. So a lot of it comes with making sure that you're tracking and that you're being really efficient with all of your processes. And that one suggestion is work on flowcharts so that you can identify steps where you can save time. And then that's helped out. I know a lot of my clients like save them time with their labor and being able to produce a lot more.
All right, thanks so much. All right, let's keep moving. I know you have so many more fantastic things
Yes.
to share with us.
Absolutely. So we're going to go into breaking down financial projections, what's included in there, why it's important for us to have financial projections. And even before we get started, I just want to mention that financial projections are not just something that we're just going to make up, or that we have to do just to have like a little checkbox, or something that's only for a tool that's only for startup businesses. This is actually a really amazing tool to use regardless of what stage you're in with your business. So financial projections are, essentially going to lead us to making better decisions, but it's going to answer really important questions such as, how much money do I need for me to be able to launch my business, or to start up this new concept? Or for example, if you are already, let's say you're a caterer and you want to start, or you're a restaurant and you want to package your food and sell it to stores or sell it a different way, you also need to know what the startup costs are going to be for that new step or for that new product. We want to also know how much money is it that we may need to request, whether that may be a loan, or whether that could be, a personal or a family loan, or to get investors. And it's also going to help us answer questions in terms of, how much do I need to sell to make a profit? And it's also going to help you set financial goals. And that's why I'm saying it's not only for startup businesses, but businesses at any stage, because we all need to have the responses to these questions. And it's really going to serve as a roadmap for us to be able to make decisions confidently. So what's included in our financial projections? So we have a startup budget, we have our monthly operating expenses, we've got our payroll schedule, we've got a sales forecast in there, we've got the break-even analysis. So how much money do I need to sell in order for me to be able to cover all my expenses? And then I'm going to go into the profit and loss, balance sheet, and cash flow in a second. But if you notice, the monthly operating expenses, that's going to tie back into what we discussed about that cost structure, right? So it's going to make us do work and start investigating and start researching, how much is it, what will be my monthly cost for me to be able to operate my business. And then the payroll schedule, remember that we have to pay attention to how many people are we staffing, because that represents about 35% of our sales. So doing our financial projections, it's going to really force us to do research and then to answer some questions that are really important to the success of our business. So the profit and loss has several names, by the way. There's some people call it the income statement, or you'll hear P&L or profit and loss. So the profit and loss basically is going to tell us, it's going to be a report of our sales minus all of our costs, and then it's going to give us what our profit is. What's really great about the profit and loss is that it helps us compare it against the budget. It helps us compare our numbers to the benchmarks, because if we're able to, we develop our profit and loss and we see, okay, I made $100 in sales and I spent $30 on wages, for example, then we're going to know that we're within a healthy range of that cost structure, because typically wages represent about 35%. So it gives us a really great way for us to be able to compare against different industry benchmarks. And it also helps us compare month by month to see what we did well, what we didn't do well. And then it also lets us know, for example, with our inventory, if we're being efficient with it or not. Our balance sheet is also a really important financial statement. So this is going to show basically what is it that we own, what is it that we owe, and what that difference is. And then our cash flow statement, this is one of the most important financial statements, and one of the most important things that our financial projections is going to provide to us, because it's going to show when money's coming in and when money's coming out, and it doesn't always happen at the same time. So for example, if I am working with a food broker and I had to make a huge delivery today, right? Maybe that food broker won't pay me for the food that I delivered until 2 weeks from now. But that means that I can't expect that money's not going to be coming in, but I still have expenses because maybe I hired a delivery driver to go drop it off. I still had to pay for my ingredients, right? I still had to pay, let's say, for my commercial kitchen. So there's still money that's going out, but the money won't necessarily come in at the same time. So this financial statement is going to help us track that activity, and it's going to help us see when is it that we are going to have to cover some of those differences. And we really want to pay attention to the cash flow, because 82% of businesses that fail has to do with issues with our cash flow. So we really want to make sure that we're tracking and that we're projecting when money's going to be coming in and when money's going to be flowing out. And if you take away anything from today's webinar, I would take this down and memorize this, but write it down instead. So my favorite financial projection template is on score.org. So if you go to score.org, just search a financial projections template, and you'll be able to download this template that I've used to help my clients get loans, to be able to start their businesses, to get investments, because it's really, really complete. And what's great about this template as well is that you have to input, I'm going to go back over here. You basically have to input information for your startup budget, for your operating expenses, your payroll, and your sales forecast. And you don't need to know how to calculate or how to do the break-even analysis, your profit and loss, balance sheet, and cash flow, because it will calculate it all for you. And not only for 1 year, but up to 3 years. So please, please, please download this, and because it makes your life way easier. And like I said, focus on completing those first 4 templates. Are there any questions so far?
Yes, we have one really good question from Alex, and it's a specific scenario, but I bet this applies to a lot of folks. So Alex is wondering about how you would suggest taking into account the efficiencies of scaling up. So you shared with us a lot of really important information about how to track the costs so that you can keep those as minimal as possible. But Alex is interested in potentially increasing sales to increase that profit margin as opposed to only cutting costs. So Alex mentioned that potentially the existing amount of labor could produce more product. So, your wage cost wouldn't increase, but you could actually increase sales. And Alex mentioned this is kind of an internal debate they're having at their business. I don't know. What do you think about sort of focusing on that side of the equation, increasing sales as opposed to cutting costs?
Yeah, so thank you so much. So I'm going to say, if you use this financial template, what's really awesome is that you can plug in different scenarios and you can use this tool to make decisions, right? And so I think that this allows you to, try and make different decisions, because you can say, for example, put those labor costs in and really think about the sales plan, right? And because it's not just about plugging in those numbers, but really thinking through, how is it that I'm going to be able to achieve those sales? And so the sales forecasting has a formula in there, so you only have to put what your percentage is, for example, of your for your cost of goods sold for that specific product line. And so you're able to play around with those different scenarios. And so I would say, Alex, just so that we are, so that this applies kind of in general, that play around with these different scenarios, because it's really going to depend on the business. And I agree that it's not only about cutting costs, but also making sure that you are able to, like you said, you're able to produce more, right? And so really having a trained team is really, really important. I suggest that you also do, like I said, like a production flow chart, so that it can help you identify areas where maybe you can produce more, right? And then also thinking about the sales forecast. So thinking about how is it that we can actually sell more, and to who and how we're going to be able to sell more.
That is so smart. Thank you so much. I think that makes a ton of sense. All right. And then we had a couple more questions, but I think you're going to get to them in just a couple of minutes. So we can keep moving and then we can come back to them if you don't cover them already.
Sounds good. All right. And I know this is a lot of information, everybody. This is usually, just want to say, I usually do these classes in about 3 sessions. So at the end, I will summarize what I think are the most important points. And then you will also get a copy of this presentation, so you can go back. You don't have to memorize everything. And like I mentioned, you don't even have to know how to create these financial statements. What's important is that you understand these key structures, or these key costs and benchmarks, and that you understand what the financial projections are telling you. So we are going to talk about, how do we calculate our startup costs? And we really need to ask ourselves, first of all, what's the concept? What is it that I want to do, right? So we have to have a clear idea in terms of what's the business that you are going to launch. Or if you're already in business and, for example, you're looking to take that next step in your business, it's really important for you to identify what is going to be that next step before you start jumping into the numbers. Then from there, we're going to ask ourselves, what are going to be all of the costs for me to be able to start and manage my business? I usually see that a lot of entrepreneurs, they're really excited about, this new venture or the next step. And then we're really optimistic as entrepreneurs, right? But I really want us to think about, when we are working with our startup costs, that we take a more conservative approach, and that we don't think that we are going to get discounted prices, or that we're going to get a friend to do X or Y, right? And so when you are working on your costs, your startup budget, try and take a more conservative approach and think of a more thorough list than just thinking, well, I might need equipment and I may need to rent a commercial kitchen. There's so many other costs. So I've got a list. I would suggest that you just do a little either screenshot of this, or we're going to send you the presentation, or if you want to do, take a picture of this. This is definitely not a complete list, but this is one of, I try to include the most common startup expenses. that I use when working with my food clients. So we can think about it in these three different categories. So think about your fixed assets. So that would be, for example, any equipment that you may need in order for you to be able to, help this concept or take this next step. If you're going to do, for example, a build out or leasehold improvements, that would go under fixed assets. A POS system, technology, and furniture and fixtures would all go under this category. We also want to think about our operating capital. So thinking about what are the costs for our permits and for our licenses, thinking about inventory, thinking about any professional services, any legal and accounting fees. If we have to do, for example, our website, we've got domain costs, we might have to do a photography session. We're going to have to pay for the platform where our website will be hosted. We have things, for example, like rent. So consider what are going to be all of the operating costs up front before you actually start generating money. A lot of the items, or most of the items that you'll have in your operating capital, will also flow into your monthly recurring costs. And then we also want to think about working capital. So always, always, always have a miscellaneous account, because we always end up spending more money or things end up coming up that we hadn't accounted for. So you want to make sure that you have a cushion for just in case. And then you also always, always, always want to make sure that you have working capital. So that means that you have from 3 to 6 months of your operating expenses in the bank. I know this could be challenging, but all of the businesses that I've worked with have all, needed at one point or another had to pull from their bank account to be able to cover some costs. And if we think about what happened in the last year, that a lot of our food businesses, they had to close, but a lot of them still had to pay for their rent. A lot of them still had ongoing costs, but they weren't generating any money. And so that meant that a lot of them had to pull money either from their bank account and or get a loan. So we want to make sure that we have a just in case fund, and then that we also have working capital to be able to cover, for any of our operating expenses as well. And so I've seen that, if we don't, then sometimes what happens is that entrepreneurs will take up a really expensive loan, and that's not good. Or they'll use their credit cards, for example, because they don't have that working capital in the bank. And so make sure that, you've got, just in case something random comes up, that's your miscellaneous, and then that you have working capital. And of course, like I mentioned, this is not a complete list, but some of the most common categories that I've seen for startup costs. Something else that I wanted to mention about the startup costs is that this is also a really great exercise for us to actually get a great idea in terms of what it is going to take for us to either take this next step in our business or for us to be able to launch our business. And I want to tell you, it's okay if you have to make adjustments, because what happens is that we'll look at this, we'll look at this summary, and then we'll say we have to determine whether it's achievable and whether we are able, set up a plan of how we're going to fund this, whether it's going to be our own money, whether we're going to, we have access to loans, whether we have access to investors or crowdfunding, for example. But sometimes we've had to adjust, right? Because it's way more than what we thought about, and it's okay if we have to adjust. So just wanted to mention that. And I wanted to share with you the steps for you to be able to calculate a startup budget. So it's really important that we actually are tracking it. So I know a lot of times we keep a lot of things in our head and we'll say, well, I know what equipment I need, or I know what I'm gonna use in terms of technology. You need to actually write it down. It'll be so helpful for you if you actually write it down. So first step, create a spreadsheet, whether that means that you're writing it in paper. I would recommend we do it electronically. And as I mentioned, you can use score.org and use their template because they already have everything set up for you. So create a spreadsheet or use a spreadsheet that already exists. And then you want to start up, second step is you want to identify your startup expense categories. For example, the ones that I gave you here. And then we don't want to just make up numbers, right? Our projections are not just, we think this is what it's going to cost, or we heard this is what something was going to cost. This is step number 3. You actually have to put in some work. You actually have to do some research, whether that's online or whether that's in person. So start getting into those details. Start going to those restaurant supply stores, or I really like using webrestaurant.com because they will give you pricing for everything. And you can even put in the type of concept you have, and they'll give you a list of the most common equipment. They do such a great job if you go to refrigeration, and then they'll give you tons of options. So you can even download specs. I'm not saying you necessarily have to use them to purchase things, but it'll give you a really great idea of what these costs are. And then they also, not only do they have equipment, they've got supplies, and they also have food costs in there. So I think that's also a really great resource for us to use so that we can develop some good, accurate, realistic financial projections. Also, if you know people in the industry, ask your colleagues and ask for estimates. So for example, if you have no idea how much it would cost for workers' comp or for insurance, get a quote. Start pulling some estimates. If you are thinking, for example, you're going to do a build out, ask a contractor to give you an approximate of how much it would cost per square foot. I know I have a metric. If anybody is here in the Bay Area, if you're going to do a build out in the Bay Area, it's about $200 per square foot to do a build out. So get information. It's going to take us, time to do research. This is not something we're going to get done in an hour or 2 hours. This is usually one of the most time-consuming steps when we're building out our financial projections, but it also gives us that ability to start making decisions and start thinking about what is the oven that I want, and start thinking about our menus and what type of equipment we're gonna use, and start, making decisions. Step number 4, we want to start identifying all of the costs needed to obtain either the product or the service. What I have found often is that we forget that there's either installation prices, that there's delivery prices, or that there's sales tax. So instead of you spending time like trying to figure out the installation, delivery, and sales tax, what I just do is that I'll add 20% on to whatever the price of the product is. And do not include a discounted price, because what happens if you don't have the cash and you've identified this really amazing oven, and at that time when you were doing your research, it was on sale, and once you actually have the money, it's not available. So once again, sometimes people will take on loans with really high interest rates, use credit cards, no bueno. So do not include a discounted price. As I had mentioned before, you want to make sure you add a miscellaneous budget because things can come up, and you want to add a working capital budget as well, which would be about 3 to 6 months of your operating expenses. And then you want to summarize it all together to get that price or that budget of what it's going to cost for you to be able to, make this concept come to life, or for you to be able to take that next step in your business. I also want to mention, well, actually, I'll take questions right now. Just before, yeah.
Sounds good. There's so much fantastic information about the startup budget. I am also wondering if this type of exercise would be similar for folks who are looking for the next step in their business. If they're looking to start a new product line or move into packaged product for the first time, if they used to do catering or something like that. Is it a similar process for starting a new aspect of the business as it is for starting a whole new business altogether?
Yes, not all the same categories would apply, right? Because you might have, for example, the same permits and licenses, and you may not need to work with the new accountant or with the lawyer, but yes, it's still gonna apply.
Got it. That's perfect. All right. And then we had another question. Speaking of lawyers and accountants, do you have any tips for helping somebody find a bookkeeper and accountant if maybe they're not happy with the one that they have? Is there somewhere that they should go, or maybe some questions they should ask as they're interviewing folks?
So I would say you definitely want to interview folks, right? And you definitely want to have someone that is going to be able to answer your questions and that will explain it in a straightforward way, right? And so I would say I know, for example, on QuickBooks, you can, they will refer you to someone who's QuickBooks certified. And so that's someone that's taken their program, for example. And so you can go to QuickBooks Online and then they have some sort of referral program. I've had clients find, great bookkeepers and or accountants also using Yelp. But I would absolutely suggest that you do interview them and that it's someone that you feel comfortable asking them questions, someone that's going to explain things in a straightforward way, and that, of course, that it's within your budget. Another thing I want to mention is that depending on the level of activity you have, you may not need to go to a bookkeeper right away. And I'll talk about a little bit more about managing your finances, and we could loop back to that question if that's okay.
Yeah, that sounds great. I think that makes a lot of sense. There's a point at which you need that help, but there's a lot that folks can do on their own. And
Yes.
something that I have told clients in the past is even if you work with an accountant or bookkeeper, it's critical to know a lot of this yourself so you know if they're doing a good job or not in the first place.
Yes. And thank you so much, Alex. I think I did put in the wrong the wrong link. So I really appreciate it. Let me fix it right now so that once you look at it again, whoops, let me just copy it. I appreciate it. That lets me know that you really are paying attention. So thank you.
Yes, that's awesome. Perfect.
Great. Any other questions, or should we continue?
Yeah, let's keep rolling, and as more questions come in, we can keep answering.
Awesome. Okay. So one of the most common mistakes of new businesses is underestimating their capital startup budget. And as I mentioned, the reason why we don't want to underestimate our startup budget is because we want to go in as prepared, as confident as we could be, and be able to cover all of the expenses, right? And we want to not make decisions out of urgency. And so make sure that, a couple of key takeaways is that we want to be optimistic with our goals and with our vision for our business and with our sales goals. But I like to take a more conservative approach with our numbers and making sure that that my clients have enough money to be able to cover. And, if they end up with some money, some leftover money, that's amazing. That's a way better feeling than not knowing and scrambling of, where they're going to come up with another $10,000 or another $20,000. And so make sure that you aren't pulling these numbers out of the thin air, that you're not just doing this because you need to finish a business plan and that you're just like checking a box off, but really take time to do your research, get some estimates. And that's going to be helpful at the end of the day for you because you'll walk in more confidently knowing that you have an accurate or more realistic plan. And so a couple of other, and here goes again with my, let me change that up right here. A couple of other great resources that you could use, as I mentioned, score.org, one of my favorites for financial templates. I love the local library because it has access to really great industry articles, access to research reports and databases. The one that I use a lot to pull industry reports is IBIS World. And then the SBA has tons of resources for you to also do your business plan, great guidance as well in terms of completing your financial projections, and then pull information from webrestaurant.com because that'll help you out tremendously. All right, so we are going to talk about setting up processes to track our money in the future. And I'll be sharing 5 tips. I could talk about this all day long, but here are some of the things that I think are really important. So one, we want to make sure that we open a separate business bank account or a separate bank account. This is going to help us with tracking purposes. It's going to avoid commingling personal with, with our business. For audit purposes, it'll also make everything way easier and cleaner. And also when it comes time for you to do your tax filing, so much easier to not have to comb through everything and figure out, was this personal? Was this for the business? Make it easy on yourself. Open up another bank account. And then that'll also help you out with building a good relationship, with the bank, potentially, for them to extend either like a line of credit, a loan, or a credit card for your business. Tip number 2, I would suggest using a POS system. And so this means, usually with your POS systems, you're able to take payments. I love it because you're able, again, to track the money that's coming in. You're able to pull reports. So you're able to see what's the item that sold the most. So it helps you in determining whether you need to take something out of your menu. It helps you determine what are the busiest times as well. So I know a lot of this will probably know, right? Because we'll say like, oh yeah, well, I know it's not that busy on Tuesdays. But this way you're actually pulling data to make informed decisions, and not just based off what we think, but based off data and our real numbers. And it makes it easier for you to track your sales tax. Tip number 3, we want to make sure we track our business financial activity. So means money coming in, money coming out, right? Because we need to pay attention to our cash flow. Usually using an online program such as like QuickBooks or Wave or Xero, a lot of these programs, and this is not a complete list. There's other online accounting programs, but they usually will integrate with your POS system. You can run reports, so you'll be able to pull your profit and loss, right? So you'll be able to pull that report for different periods of time. You're also able to pull a cash flow. Now you're able to create budgets using QuickBooks. You're able to do invoices, and it's just really, they have a really, well, at least with QuickBooks, really great dashboards. And so at any time you can see, how much have I made this quarter? What have been my expenses? So it'll help you with knowing the money that's coming in, so your sales, and all the money that's coming out, all of your expenses, and help you keep track of that profit. And so that'll be easier when you are reviewing your financial goals and creating your financial statements. And so I'm not going to say that this is going to be a great option for everybody at once, right? Sometimes, even though this is going to help us do it in an easier way, it connects to our bank statements. If you don't have a lot of activity, you can start out by doing an Excel sheet and tracking money coming in, money coming out. Make sure that you're including dates, make sure you're including amounts, make sure that you're including details as to how this money either came in or the money that went out. But if we're starting to get weekly, for example, weekly activity, then I would use an accounting system, because it's going to be too much work for you to keep it up manually. Also, if you have the capacity and you have the time to do your own QuickBooks, you can do that. But if you, for example, are running a coffee shop or you're running a restaurant, then I wouldn't necessarily, and you don't have the expertise, I wouldn't necessarily suggest that you do it. I would say, put it in your budget for you to be able to hire a bookkeeper that can help you out with that. We don't have to do everything on our own. What I do like about starting doing it, manually and doing that tracking, is that it helps you start paying attention and getting you into that headspace of reviewing your numbers and making sure that you know where every single dollar is being allocated, or where it's coming from. And so going back to a question in terms of accounting and in regards to where do you find a good bookkeeper, you can go to QuickBooks Online. I've also had clients find bookkeepers through Yelp, and you want to make sure that they are, I would ask them to see what packages they have, because you may also want to have a bookkeeper that can scale with your business, right? Maybe someone that at first they're doing just your bookkeeping, maybe then that they can do your payroll, and then asking them, I would also ask if that means that you can ask them questions, if you can just call them up, if you have monthly meetings with them. I would also ask the bookkeeper if they can provide you with a profit and loss statement on a monthly basis, because in that way you'll be more aware of where you're at with your business. You want to make sure, another tip is that you want to save money for your taxes, right? Every single month. It's going to be a different amount for all of us, depending on what type of legal entity you decide on. But you want to make it a habit that you're putting money away so that you're able to pay for your taxes, and that you are considering, making quarterly tax payments so that you're not, at the end of the year, you don't have a huge payment that you need to make. And then tip number 5, you want to make sure that you plug in all financial related deadlines and important dates on your calendar. So there's all sorts of financial deadlines that we need to be aware of. So there's state and federal tax deadlines. Once again, depending on the type of legal entity structure that you select, you're going to have different deadlines. You also, depending on, for the sales tax, you'll have to either file on a quarterly basis, on a monthly, quarterly, or an annual basis. Quarterly tax prepayments, there may be other important deadlines depending on the state that you live. So I would make sure that you plug these in, and then you also plug in time to work on financial activities. So in order for you to do your QuickBooks, for example, in order for you to review your POS system. So you want to make sure that you make this into a habit as well. And one thing I am going to say, something we do want to do on a daily basis, you want to check your bank account just to make sure that everything is accurate, all the transactions, went through that had to go through. So check your business bank account on a daily basis as well. And lastly, I want to share that our numbers and our finances tell us a story, and they can help us make informed decisions. And they're just as important as our food. And if anybody needs support with developing their financial projections, I still have some availability to take on clients for May and for June. And then I share plenty of financial and money management tips on my Instagram. So feel free to follow me at VP Consulting SF, because that's where I share any upcoming webinars that I'm giving and financial tips on a weekly, almost daily basis.
That's amazing. Thank you so much, Viri. This has been so helpful, and I'm really excited. We have just a couple of minutes left. So if anybody has any additional questions, then type those into the chat and we can answer them here. But I'll also mention that we have a great network of resources available, both through partners. I really encourage you to check out vpconsultingsf.com, and then also our Brewing the American Dream partnership offers a lot of resources for food and beverage businesses, specifically online, all sorts of different topics, not just on financial projections and financial topics, but everything from social media, marketing, sales, and then also at Axiom Opportunity Fund's website, we have lots of resources available. So I'll drop those links in here. And we really appreciate your time so much, Viri. It's been amazing to get to learn from you in this way. And I appreciate everybody's time for joining us today, and want to be respectful of your time. You're busy small business owners, so we'll give you your day back. But appreciate everybody joining us, and be on the lookout for the recording. We'll send that through tomorrow morning, and we will see you at our next webinar. Be on the lookout for information about that as well.
Thank you, everybody.
Well, thank you, Meredith. Thank you. Bye-bye.